What's going on, Eagle investors? This is Samuel here with another episode of Trade Idea of the Week. Today we'll be talking about an American Express earnings trade, specifically a credit call spread on the 185, 187.5 strikes. So for this, we'll be selling the 185 call and purchasing the 187.5 call for a net credit trade that is risk defined on each side with a set profit below 185 and a maximum loss above 187.5. Now, these levels were set based on the implied move as well as where the underlying stock, American Express, has gone in the past 5 months, going from the 150 level being relatively range bound to the 180. And American Express would have to make new highs to breach this level. Now, AXP has been very bearish for earnings in past releases. And what that means is it doesn't matter if there's a surprise or an upset on the actual EPS and the other earnings numbers, but what we're looking at is the actual market reaction the following day. So the 185 level is a far buffer and does require an all-time high to be broken. On top of that, I mentioned this was a net credit transaction, and overall earnings volatility is usually bid up with speculators and hedgers purchasing long calls and long puts, meaning the volatility comes down when it's more certain and the certainty comes back into the marketplace the following day after the earnings release. AXP earnings are 10:22 before the market opens, meaning putting this transaction before then would be ideal. There's a probability of profit of around 74%, and we're capturing around 25% of the buying power effect. So again, this is the November 19, 185, 187.5 credit call spread. Now the target upside and management plan. We'd be targeting at least 50% of the max gain with a max gain of 25% of the BP, likely closing post earnings call. So what this means is to really isolate the earnings event, we could close this spread the following day after earnings are released, capitalizing on the volatility contraction without being exposed to overall market direction and whether or not American Express will trend up or trend down in the following weeks. Now that said, we will look at earnings to see how best to manage. Now, if earnings are exceptional and AXP does make new highs, we look more at the guidance to identify whether we think that AXP will fade in the following weeks or if it will continue to rally. If it looks like it will continue to rally, we'll make sure to cut the position promptly for a minimal loss, given this still profit in the volatility crush. But if it looks like it could fade from there, we can hold on and see if that thesis plays out. Now, in summary, going for a neutral to bearish strategy at AXP provides a strong risk reward over earnings as volatility is bid up and new highs would be needed to break the spread. The November 19th 185, 187.5 credit call spread looks favorable and can be managed after earnings for a high probability of profit. I hope you enjoyed this video and another trade idea of the week. Make sure to like and subscribe and join our Discord trading community in the description below. Thank you.